For today's video, I'm going to talk to you guys about fair value gaps and how to identify them in the market. This video isn't going to be that exciting. It's just going to be super easy, probably super short. It might even be less than 10 minutes. I don't know yet. This was pre-recording. But yeah, it's going to be a super quick video for you guys. I hope you guys enjoy it. And if you do, I don't usually want to ask this, but subscribe and like the video. It really helps me out, and it knows that you guys like these videos and I can keep doing them. Hopefully you guys are enjoying the Simplified Bootcamp, and if you are, make sure to watch the videos before this if you haven't, and I hope you guys enjoy it. Yeah. As you guys can tell from the intro and the thumbnail, I'm going to teach you guys how to learn fair value gaps in the market. It's a super simple tool, and I use it every single day, and I hope it's going to help you guys in the market as well. Let's get right into it. So the first thing I want to do for you guys is I want to draw what a fair value gap even is, because you guys probably don't even know. And if you do, and you just need a refresh, that's completely okay. I'm glad you guys clicked on this video. So right here, a fair value gap, all it is just one candle, and then a candle right here, and then another candle right above it. And then this gap right here, that's the fair value gap. That's all it is. And all it does for your trading is price will go back into this fair value gap, and then it'll shoot out of it. And you need other confluences with this, but this will make you profitable if you use it right. And I guarantee an 80% win rate if you use this right. Coming over into this, I already talked about fair value gaps, and when I was editing this video, I realized I just briefly went over it. So I'm going to go over this for fair value gaps a little bit more. So fair value gaps, as you guys know, they look like this. So they have this imbalance right here. So it's an imbalance or a fair value gap. I say both sometimes, so if I ever slip up and say imbalance, it's just a fair value gap. It's the same meaning. But anyways, this all in here is just liquidity. It's the same thing as I went over in the other liquidity video. That's all it is just liquidity. So when price goes back into here, it's going to jump out. And then if it doesn't, so say it goes like this, and then say it candles through it, wicks through it again, then this area creates a BPR. And a BPR is balanced price range. So when it creates a balanced price range, it'll go down, and then it'll go in, and then go out, and it'll act the same as a fair value gap because that liquidity is still there. Those orders are still there, but it's going to go for the opposing direction. So this one, if it went, and it actually change it a little bit. So if it went like this, and then it respected it, it would have still been bullish. But then if it broke through it and did the BPR, it would have been a bearish, and then it would have went back down. So that's the difference, and that's only what the difference is. And then that's all you need to know with fair value gaps. Fair value gaps are super simple. They're super easy. So looking at live examples now, I'm just going to be looking for fair value gaps. I already see one. This is just kind of lucky, but I see one right here. Bam, bam. What's this? Fair value gap. What does it do? It fills the fair value gap and price goes down. It's that simple, guys. It really is that simple. Right here. It really is that simple. Right here, I'm going to show you guys another fair value gap. Bam. Goes into it, price goes down. It really is that simple. All it does is show liquidity in the market. And we talked about liquidity in a prior video. Liquidity, all it is, liquidity is right here. It's just a high and then a low. All it is going up, down, up. That's what liquidity is. But with that,
liquidity is a fair value gap because all those orders that need to be filled are in fair value gaps and they're in liquidity. That's all it is. So now I just jumped on over to NQ, NASDAQ. So now, what am I looking for? I'm looking for a buy side and I'm looking for sell side. So right at market open at 8:30, before 8:30, we had a high right here and we had a low right here. And we were waiting for one of them to get hit when market opened. So in right here, I'm going to mark out the market open right here. Market opens at 8:30 Central Time, 9:30 Eastern Time. And what happens? We see this fair value gap. That one gets filled. We see tons of fair value gaps. Obviously, it didn't go down all the way over there. But okay, you're looking at this fair value gap, and we had buy side liquidity get swept. So then you're like, okay, now you're looking at this fair value gap. What do we see? We see a high right here. All we need is a break of structure. I went over break of structures in the video before this, and if you didn't watch it, go watch it right now. But all we need is a break of structure. It's a high. New high gets made. That's the new break of structure. What happens? We enter off of this candle, put stops below here. We can put TP right up here. Bam, winning trade. Winning trade, that simple. And obviously you need your daily bias. You need a break of structure. You need all that stuff. And the more reps you get in, the easier it's going to be to get more wins. And also you're going to get more losses, but your win rate is going to stay consistent, and all it's going to do is be at a consistent basis the entire time. And I bet you it's going to be over 80%. All right, let's go to another one. We'll go to last week. Bam. I just jumped over to last Monday, October 28th, and I already found another fair value gap get filled. So what do we got? We got market open right here. Market opens right there. Okay, what do we still need? We need buy side, we need sell side. We need one of them to get filled. So if I'm going over the 28th, what happens? We have this huge fair value gap. And then we have this and this. And what's a fair value gap, by the way? A fair value gap is liquidity. So now you're like, okay, which one's going to get hit? So then market opens, and what happens? Market opened, what did it do? It tanked. It didn't go hit this buy. It didn't go hit the sell side. Instead, it hit buy, and look what happens. Now you're like, okay, I need a break of structure. Bam, we get a break of structure right here. What's next? We need a fair value gap to get filled. We have this little tiny fair value gap. We have that tiny little fair value gap right there, right? Bam. Get in right here, put stops below here, put take profit right there maybe. Bam, another winning trade. I looked at two winning trades, and obviously you're the best trader when you're looking, but there's more than that. I was just lucky that I found these. I didn't even try to find these before the video started. Like, it's that simple. Look for buy side or sell side to get hit. Look for liquidity. And then wait for a break structure and a retrace into a fair value gap. Boom, you have a trade. You have a winning trade right there. I just taught you guys how to trade in one video. I hope this video helped for you guys. It's super simple. Look at this. Winning trade, 2 winning trades I showed you. And that's all I got for you guys. Look for fair value gaps in the market. The best confluence to take every single time.